I'm joined right now by Malcom Gilroy, Global Head of Sales and Trading at Dunn Loren Merrifield. He'll be giving us his thoughts on what to expect from that MPC decision tomorrow and, of course, the broader fixed income market. Malcolm, it's great to have you, as always, on the show today.
Thank you, Wally.
All right, I want to start, first of all, by getting your thoughts on what we're seeing in the fixed income market with respect to foreign investor interest and how that is likely to play into the MPC decision tomorrow. We've seen foreign investors hold back a little bit, possibly because the yields are not as attractive as they used to be about 6 months ago. But your thoughts on that dynamic and how that is going to play into the MPC decision tomorrow?
Well, I think the market went pretty much straight up all the way from August last year, and it got down to interest rates in the 10-year of about 10.45.
Right.
We're trading today back at 11.60, so the foreign investors have possibly taken some profit. And I would think that at around these sorts of interest rates, you would expect to see them come back into the market. However, they're going to wait for the MPC decision, right, which I do not believe is going to do anything at all to any changes. I think that people have talked about the central bank easing. That's unlikely right now. I certainly don't see them tightening, although people once again have been speaking about currency weakness.
Exactly.
Now, the currency weakness I really don't see. I mean, people are talking about it having gone down from 155 to 158.50, and that the budget used 160 as being the benchmark. That, to me, is not really any major weakness whatsoever. I think, in fact, it's held in quite well given where the oil price is.
But I think what people speak about is the trend. I mean, if we continue to move closer to 160, and we continue to hear about things like the central bank intervening, especially in the interbank market like they did on Friday, people begin to get a bit concerned. And I guess the point to make there, like you've just made, is that we're still within the band, still below 160, so we're still in a safe place.
Absolutely. The only thing that I can see that is really of concern to me at the moment in the currency is that we have seen some weakness in the oil sales of Nigeria. Right. And in the fourth quarter, we saw those oil sales drop by 10%. It's apparently still dropping. The counter to that is that our foreign reserves have gone up to almost 48 billion, or 10 months of cover. That seems to me that the central bank has got the currency under quite good control. I don't see that they need to have any outward move to control it right now. I think it's behaving quite well.
All right, so we've seen inflation at 9.5% for February. It's still within the broad expectations of single digits for many analysts at this time. Your thoughts on how this is likely to impact bond yields going forward?
Well, it moved from 9% last month to 9.5% this month. We have bond yields trading at 11.60, so we've got 200 basis points of real return. That, to me, is pretty significant, and I think it's probably a good buy.
Very important point to make as well. Now, let's talk about the news out of the federal government today. Minister of State for Finance making a point that it's been pretty expensive borrowing in Nigeria. They spend about 700 billion naira paying interest alone on the domestic debt. How do you see things changing, if at all, this year in terms of borrowing by the federal government?
I don't see how the federal government can do very much more. They've already increased their internal rate of returns by bringing in a lot more internally generated funds through taxes. They can continue to do that, but as we all know, the federal government spends almost 65 to 70% of all of its earnings on paying for the civil service and the government. So until that can change, I don't see how they are in a position really to change their borrowing stance.
Okay, but what about the option of borrowing internationally, issuing Eurobonds? Do you think that is likely to happen this year? They've already announced a plan to do that. Do you think they will execute on that this year?
I think they might, but it's not going to be for a huge amount. I mean, in comparison to what their total borrowing levels are, they may do another 100 billion or $1 billion in there, but they're not going to be able to do enough to finance the whole of the Nigerian deficit, and that needs to be funded locally.